Okay, are you guys with me? Okay, so because I just started recording, I'll have to go over it again so it's available in the video. So like I said from our last class, we looked into market structure, and I said the next class we're going to look into advanced. We just started briefly on advanced market structure, right? So I explained this diagram. You see, for the first diagram here, this is an uptrend, price is going up. The second diagram, price is coming down, right? So in the movement of price, right, in market structure, it's not just about higher highs and higher lows. If it was that simple, everybody will be making market. There'll be no losses in the marketplace. But in real time, in application, it's not so simple to spot like that. You have to train your eyes, because that's why I'm teaching you advanced market structure. We have concepts like the impulse and correction, major and minor structure. So you have to be able to identify these things in the marketplace. It's about training your eyes. That's why it's very important that you take out time to do the assignment to spot these things, because the more you can spot them and mark them out, do your markups on the chart in the marketplace, the more you're training your eyes to better identify it. Because as we're getting deeper, it might be very difficult. So you have to roll up your sleeve. If you want to get value from the class, you have to roll up your sleeve and work. Like I said in the start of the course, it's a business, so you have to work it like a business. It's not free money. It's not a Ponzi scheme. It's not a get rich quick scheme, right? So in explaining advanced market structure, right, I said that the move in the direction of the trend for uptrend bullish movement, the move in the direction of the trend is called the impulse, while the counter trend move that goes down to form the higher low is called the correction, right? Then the move again that takes out the previous high to create a higher high is called the impulse. So we have series of impulse, correction, right? So I started explaining the concept of inducement. Now I said that inducement is simply what the word means. It's inducing. The algorithm is inducing buyers, either early buyers into the market, or people that have bought before, to trail their stop losses, right? So I said now let's take, for instance, you are a buyer at this point, at this higher low here. You bought at this particular point here, right? And price is moving up. You are happy with the profit price is generating for you, right? And we know in the forex marketplace, we are going to talk more about it in stop losses, setting your stop loss. You can set your stop loss in profits and in positive when the trade goes in your direction. So for buyers that came into the market at this point, they'll be happy with the profit that this move has generated by creating a new high. So by the time the market retraces or makes a correction move to create another higher low here, another higher low at this point, they will most likely want to trail their stop loss to trail lock in profits here, because they don't want to lose money on the table, right? So as the price is going up, they are locking in profits at this point, right? Now, from our last class, I defined that your inducement is always the most recent higher low, or you can call it the first higher low or the last higher low, depending on how you're looking at it. If you are counting your higher lows from here, 1 to 3 is the last. If you're counting immediately after the current higher high is the first, right? But I'll call it the most recent higher low in the move is always inducement. Why? Because you have people that want to jump in. Maybe someone just came into the chat and saw, oh, market has been on an uptrend. Oh, where's the higher low? Okay, it's just forming the higher low. Okay, let me jump in. Let me jump in at this point, right? Let me jump in at this point and put my stop loss, right? Then for people also trailing their stop losses at this point, it now creates liquidity. It now creates money in the marketplace. And the algorithm from our last class, I said the algorithm is designed to do just primarily one thing, which is to seek liquidity, right? Or you can also separate it into two things. Is the algorithm is designed to seek either to balance imbalances or to seek liquidity. The same thing. So this is the point of liquidity here. So the algo will always come to hunt liquidity, right? For the because the way the algo is designed, the big institutions play on the algo. They understand how price moves. So they come to seek liquidity here to engineer the further move to the upside, right? So people that have traded all their stop losses, unfortunately, they will be taken out with those little profits, and the early people that entered here and put their stop losses will also be taken out, or people that entered maybe at this point they were in the middle of the move and they entered here and put their stop loss under the same spot. They'll also be taken out to form the liquidity to move the market upward. Do we understand to this point? Are we following?
Yes, sir.
Okay, so now if that is understood, I'll move to the next thing. We know that this is impulse and correction. Now we know that in this impulse and correction, we have I explained time frame, right? So let's imagine, just imagine, let's look at the next concept before we go into live example, which are the major and the minor structure. So looking at the major and the minor structure, let's imagine that for a bullish movement, let's look at the bullish movement, right? So the black line is the major structure, right? So let's do something. Now we know that price does not just move in a straight line. You see this movement here, this impulse movement, you can still put it like this. Sorry, let me delete, put it red. Okay. So everything happening for this impulsive move can be termed, because price does not move in a straight line. If price moved in the straight line, it'd be so easy to trade the marketplace, right? So we see this is how price moves, right? So everything now, it moves like this, just creating series of higher highs and higher lows, right? Like that, right? So it moves in that direction. Sometimes it might impulse to one direction, but it moves like this. Do we understand? Now, for the purpose of this class, let's assume that the black movement is on H1 time frame. That's an hour time frame. So this movement indicated by this black line here is our H1 time frame. Let me put it black, make it a little bit bigger. That's our H1 time frame, right? So the H1 time frame showed us this movement, right? That gave us the impulse, the correction, the impulse, the correction, right? So in this movement, if you go to a lower time frame, you see the structure of price will give us the red line is the smaller time frame. So let's say maybe the red line, let's call the red line the 15 minutes time frame. So the red line is the M15. It's called M15 time frame. So I can color it red so we understand, right? So now, anytime price moves, the structure of price in a particular direction, right, also creates a minor structure in that same direction on a lower time frame. I'm going to give live example. I just want to explain with this diagram. I'm going live into the charts today to explain from basic market structure to this advanced, but I just wanted to set the backdrop with this diagram, right? So let's imagine price is moving this way, right? So if you see in the inside structure, you find inducement in the M15 time frame, and you find inducement in the M1 time frame. So this helps us to understand that structure is in two ways. It's major and the minor. So now we see the same diagram I had in this top of impulse and correction. You find it also on the minor time frame. On the 15 minutes, you have your impulse, you have your correction, right? So now where it gets confusing is for the correction move. Let's take, for instance, you came to the chart and you saw this move going to the downside. You saw that move to the downside, right? That move to the downside. Now, if you are on the 15 minutes time frame and you are not on a bigger, higher time frame, you will be confused and think that market is going on a downtrend, but you will know that market is just move, right? Are we following? Market is just doing a corrective move to the downside to continue moving up. So you might be positioning yourself. So imagine someone comes to the chart and now sees, because you see that market also forms higher highs and higher lows on the minor structure. Let's say this is the higher high, this is the lower high, this is the lower low, the lower high, lower low, lower high, and lower low. Then you now position yourself as a seller here, thinking that, oh, price is going to just keep going down. You notice that most times you'll be taken out because you are selling your trade in the minor structure, not the major structure, right? So it's also safe to understand this rule, right, in the marketplace, that the market will always respect the direction of the higher time frame. The market will always respect the direction of the higher time frame, right? So let me write it on our chart here. Higher time frame. So HTF is higher time frame, right? Higher time frame direction takes how would I put it? What do I call it? Okay. It's trumps, okay, or takes precedence, or okay, takes priority, right? So always you don't lose your higher time frame bias. You don't lose it in the marketplace. The higher time frame will always dominate. It will always take the priority. So when you look at the lower time frame, one way you can trade in a good way is for you to always trade in the direction of the higher time frame, even if you go to the lower time frame, right? Is this understood? Any questions before we go into the chart example? When I start explaining the chart examples, I know you understand better, but just, is there any question before I move further? Any question? Okay, so I can continue, right? Sorry, as we are getting deeper, the class might get a bit confusing. So that's why I always like to pause for us to ask questions, so that at least I'm carrying everyone or carrying majority along in the class. And you still have the recording to go and watch it over again. Okay, so let's continue. Now let's go into chart examples. Let's go into chart examples, right? So right now I'm on the Nasdaq. It doesn't matter the particular asset I'm on the NAS 100, right? So I'm on 1 hour time frame. You see, this is the 1 hour time frame, right? What it means on this time frame is that per candle, one candle like this is 1 hour duration. So this is almost let me just look at price action for the day, right? So today, let's look at September 20th, right? So that day starts at 12. Friday 20th was 12, right? So starts here, it ends the next day. Let's just look at that price action for that day, Friday. So Friday ends. Okay, so this is Friday, or okay, Fridays. Let's look at, okay, let's just look at that. So now from our explanation, in our previous class, I talked about in a day we have how many candles. If you count them, the 1 hour candles, right? Okay, Friday does not explain it better, but from Friday to Monday, we have from the first candle from the 1 hour, 1, 2, 3, 4, 5. Let's just count them: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, right? So that's 24 hours. So you have 24 1 hour candlesticks. So I did that to explain, right? So now if we look at just looking at price action, let's not look because we're on the Friday and 1 hour time frame. Let's just look for multiple days. Let's just look at the trend from starting from Friday, right? If you look at this place here, let's start from here. Now, this will be our higher low, right? Right? So this is the low. This was the highest high, right? This was the highest high. So if we look at it, if we look at the mapping, this is our higher high, because okay, we look at this low. This low did not take out this high, right? This was the last when we're coming from bearish inside structure, right? This was the last lower high. So this is the lower low. Now this lower low now turned when price broke above this point. When price broke above this point, we can say that price broke to the upside, right? So now price now turned bullish, now forming lower low. So if we move, the next point we'll find our lower low again, because this high was taken out, will be at this point. This is our higher high. This is our higher low, right? So what's the next high that takes out this particular high? This high was higher. This high is lower, right? Our mapping, are we following? So this is the lowest point, right? From this point to this point, it took out this high. So this is our higher high. So let's look at this point right now. Are we following? So now, based on this, we see that based on my mapping of basic market structure, I mapped it like this. But if you look at this point, you see that you can also, when price retraces down here, this low didn't go lower than this one, it was higher. So you can term this low at this particular point. Let's see if I can cut price. Okay. So before every other thing printed, when we came to the chart at this particular day, at this day, and we saw this form, right, we'll take it that in the leg of structure, this was our last higher high, this was our last lower high. Are we following? Right? This is our last structure. Please, let's follow. If you have to stop me to ask question, ask, right? So before this high was taken out, we see here, this is the explanation of our inside structure. We see that price came low, it created a high that was higher than this low, but it was not higher than this high, so it cannot be termed a higher high because price was going down. So you'll be able to call this like an inside structure of price going down. So if you didn't understand, you might be wanting to take a sell to the downside, not knowing that price is on a bullish movement. Do we get? Now, when price now created this other low that was lower than this previous low. Now, even if you knew that we are on a bullish movement and you knew that price was going for this high to take out this high at this particular point here, right? You didn't know, you came to the chart, right? So where were you as a buyer and you didn't really understand the concept? What did I say was inducement? I said inducement was the most recent higher low created, right? So if we look at price in this direction, when you came around here, you term this way that it's a higher low that was created before price moved up, right? But this higher low now will be inducement. So if we play price, you discover that most people that jumped in, okay, I'm going to take price from this low because you see this low came here. It was support and resistance people. Oh, this formed a support here because price did not take out this low. So most likely price is going to continue going up. And I now buy at this point, putting my stop loss just underneath this place. Are we following? Just underneath this place. I just put my stop loss just underneath this place or underneath that low, right? Because I want to buy to the upside, right? Now, what price will do? I said the most recent higher low or the higher low formed is most likely the inducement. So if you play price, you see, can you see what happened? The algo will always go in the direction to seek the liquidity because the algo knows that money is resting here. People that were buying from this point have trailed because of this high movement. They have trailed their stop losses under here, and early buyers that came to the chart before all this candle formed had bought, right? You see, so they bought, so they were smiling with their profits. All this movement, this candlestick formation to the upside to here, they were smiling with their profit, not knowing that they were inducement to the market. Now, do you see? Price came down, took out the inducements, but continued upward to the direction, right? This is the concept of advanced market structure, right? So we can see this is depicted by this same diagram I drew the first time, like price going this way, going like this, then coming down to take out this point before continuing upward. So this point at this point here is the inducement, right? If you understand this concept, I know traders that trade only this concept, just looking for this concept to play out in the market in direction with your structure. So you just map your structure, and that's why I'm teaching you structural mapping. You map your structure along that direction, then you just follow this concept and you trade it. So they always wait for the inducement. As soon as the inducement is formed, they take their trade at that point. So I'm not going to talk about entry now. We're going to get into entry in our subsequent classes, but just for you to understand the concept of advanced market structure, right? So if we exit, we can as well we can exit the replay. And you can see how price moved, took out inducement, right? This was the first point. If you see the way price moved again, after creating this, now okay, this we have ended price. So most likely now, you see, when price was going higher, now from here, based on our classes, you see, this is not this point here. Is this point lower than this point? Let's see. Yes, it is. Can you see? So traders too would term this like the higher low. So the higher low has formed for this market. So this was the impulsive movement. Then it gave a little correction movement. Now, most likely, you see, most likely this is where price action is as at today, Thursday. Most likely what price is going to do is to take out this high. If the uptrend is going to continue, price is going to go to take out this high, because price has used this place as inducement, because it's the most recent higher low, and taking out all the trader, even people that were trailing their profit based on all this movement of this candle, have taken them out. Then price is continuing to the upside. And let's look at more examples. Let's go backward in price action to see the concepts, right? We can see here too. Can we see it? This particular point too, right? So you see price was moving. This is what? This is our higher low that led to this higher high, right? Now came again and created the next higher low, right? Sorry. Sometimes I just forget these tools. Okay, now created that higher low at that point. Now, because when we look at price at this particular day, let's say on Wednesday by 2 a.m. If you're a trader, you came on Wednesday by 3 a.m. New York time to trade. Now you look at this, you look at your structure to your left, because it's the price action to the left, you could see, right? Look at price action to your left, to this side, right? And you say, okay, market is going on uptrend because market created a higher low. It took out this higher high, created a new higher high, right? Came back from a higher low, right? So most likely for this higher low to be valid, it has to come back and take, right? It has to take out this high. When it took out the high, it created another. Can we see this? It created, it created a higher high. So this was our most recent higher high, right? So this higher high here validated this higher low because it took out this high. So this is a valid higher low. So this was our most recent higher low, which is termed our inducement. It's our inducement. So the algo will always seek liquidity, seek out the inducement. Can you see what happened? It came down to that low and took out all the people. Can you see? This was the lowest point. Let me delete this so you see what I'm talking about. Can you see that was the lowest point in price action? Can you see the lowest point? That was the higher low. Market came down, took it out, right? Then there are two things it does because it's seeking out the inducement liquidity. Buyers that are not very experienced in the trend might be selling. Sellers might be selling from up here, saying, oh, price is going down, they are happy, oh, they are seeing profit. When price took out this inducement, it will reverse, and if they're not smart enough to exit, it will go and hit their stop losses, taking them out, because we are on a bullish trend. Do you understand? The same concept applies here, because if you look at it in a market structure mapping, you can stop me and ask question, right? If you look at this point also is our recent higher low rest, and you see the inducement, it came and took it out from here. This is the concept of advanced market structure. Are we following? I hope I'm not boring you with so much detail. Hello, are you guys still on the call? Okay. I just want to be sure. You can never tell when network has gone off. So I want to be sure that you guys are still on the call and I'm not just talking to myself, right? So that's the concept of advanced market structure, inducement. So for better understanding, this is the diagram. This is what you see what happened here. Exactly this diagram. This is what happened, right? Market creates higher low, comes down, takes out that point, then continues to the upside. That's why you see some traders say, and I was right in the direction it took me out, then it continued. Oh, how annoying, right? And you see most people that are not experienced, immediately market took them out here. You say it's breakout traders. It has broken out from this support. So it's buying, it's selling. They start selling. Market reverses and takes all of them out as liquidity again. That's why you should understand the way the algo is programmed, Oh, Ture, please, you can ask your question. Yeah, Ture, your hands.
Can you hear me?
Yes, I can hear you.
Can you hear me?
I can hear you.
I'm saying, can you hear me?
Yes.
All right, cool. Yeah, so basically, this is like, okay, sorry. So basically, this is top-down analysis, right? If I'm not mistaken, more or less.
Yeah, more or less, but we are not yet there. But I'm just trying to explain advanced market structure. But everything combines. That's why.
No, like I'm saying, that's basically the concept, right?
Yes, basically. Yeah, you're right. Basically.
Man, I'm sorry. Like my network is really crappy. Yeah, but like so basically, the concept of this inducement is like a very like dope hack. Like, why don't most traders know about it? Like, I feel like it's like a cheat.
Very well, exactly, because it's a cheat. That's the way the algo is programmed. So most traders are trading retail concepts, so they don't really understand that the algorithm is programmed to move in this way. So once you understand it, yes, it's a cheat code. Yes, it's a cheat code. But you know, in the marketplace, market is not always 100%. But when you understand this concept, 80% of the time or 70% of the time, you are in line. Yes.
Well, so and like you're like one of the few guys that I have heard that believe strongly in the fact that market is basically algo, because a lot of people don't believe it. Like they believe it's actually the buyers and sellers that are in charge of it. But like it only makes sense with the definition or the explanation of inducement, because it keeps happening over and over again. So it has to be algo of some sort, right?
Yes. It has to be algo because these are not just buyers and sellers. Now. It's algorithmic. This is precise. Everything does not happen random in the on the chart. It's not a random thing. Like you say, okay, sellers are coming here. Okay, if it was buyers and sellers, so what happened with news? Do you think that when a
Wow.
fundamental news is coming out, do you think that okay, then people are just pumping money to make price just move like that? No, the algo has just been programmed to just play with your sentiment of people to think that oh, this news is coming out because the news they
Yeah,
say
sure.
dollar is going to be high. You understand? So it's programmed that way.
You remember that?
Right. Because see, if you
Man,
look at the concept, I don't want to just go deep
that's
into this
crazy.
because it might
That's
get
crazy.
confusing.
That's crazy. Man, good job, man.
Uh,
Okay.
okay, so we can forge ahead, right?
Yeah, I
Explain.
understand.
Okay. Okay,
Yes,
so you
please. Yes,
see,
please. I'm so sorry, guys, for yeah, thank you.
so as you can see, this thing keeps repeating himself. Nothing is random in the market, right? Part of this course, like I promise you guys, I'm teaching you everything I know about how the market moves, right? In our next class, when we start talking about liquidity, we're going to have a class on time and price. I'll show you how everything is timed. Everything is timed. And if you were like a banker like me, or you are into banking and finance, you understand that every transaction in the banking sector is timed. That's why you see T plus one, T plus two transaction. There's almost a time that the clearing houses open to clear checks. So everything is timed. That's the same concept that the algo was programmed based on the time, the openings of these particular countries, their stock exchanges and everything. When I explained in our foundation about the London session, New York, right? So everything is timed. Hello guys, can you hear me? Sorry, I lost connection, so I had to just switch to an alternate network. Can you guys hear me? Okay, so let me present. Let's continue. If you can see my screen, let me know you can see my screen. And just drop in the charts.
Yeah, I can.
You can.
Yes, sir.
Okay. Okay. So what I was explaining now, I wanted to explain the concept of minor and major. So right now we can say in the 1 hour, we're in the 1 hour time frame. This is our major structure, right? So now let's look at this movement here. I'm going to go, which date are we? Thursday 6 a.m. So from Thursday 6 a.m. Thursday 19th of September. Let's go to 15 minutes time frame. We can track it. It's easy for us to track, right? So this is it. Can we see here? So you see this movement now. Can you see this was just the correction movement on 1 hour time frame? But if you didn't understand, for people that are not experienced in reading price, you will say we're on a downtrend because you see this was the previous higher low, right? Right? And anytime a higher low is taken out, we can call that a break of market structure. So it has broke structure to the downside. Now it's creating lower highs and lower lows, right? Am I correct? So this lower high, this came down, created a lower low. No, yes, created another lower high, lower low. Can you see? So this is the minor structure of the major structure. Do we understand? Now, can you see this point? At this point here, if you go down to another a lower time frame, you see that this will create another structure. Are we following? Am I with you? Are you? Are you with? Okay, okay. Sorry, before I speak what is not in the English dictionary. Okay, so now this is the minor structure in this leg. So our corrective move on a 1 hour time frame, which was a bearish move, now creates what we call the minor structure. So now for a trader, if imagine someone that comes here and maybe you analyze and you thought, okay, we are going bearish now, and you are buying up to, you are selling up to this point. Can you see that your place, this place that you thought that okay was the last lower low, was just inducement for the up move to continue to the upside, and it continued, right? So this, when you go lower to the lowest time frame, let me go to 1 minute time frame, you'll understand this better. 19th, right, from 6 a.m. Let's go to that time. 19th of September, 6 a.m. Sorry, just give it time to load. It might take a while to load. Okay, so can you see this? So this is our 1 minute time frame. Can you see that the 1 minute time frame too has its own structure as it's going up, right? Can you see? Now, imagine someone too that was on the 1 minute time frame and saw that this was a minor structure in the 15 minutes major structure, which was a downtrend. Now, the person will be buying upward, not knowing that there's a turning point, because what? It's just a minor structure, right? And you see the market turned. So you see, now there's a one basic rule you need to understand. Let me say the basic rule of price action. Price is fractal, right? Price is fractal the same way time is fractal. But just put that at the back of your jeans for now. I'll explain it in the subsequent classes, you understand. What do I mean by price is fractal? I mean that the same thing happening. Can you see that even on the 1 minute time frame, if I came to the this chart right now, and let's say I do this chart on full screen. Can you see my screen? Please let me just hear you. Can you see, just unmute your mic? Can you see my screen, right?
Yeah, I can see
So
people. The network is.
yeah, but you cannot see the time frames, right? You cannot see the time frame. So if I
Yes,
ask you,
yes, yes.
if I ask you now, which time frame are we on? Can you tell me? You cannot tell me. You
Yes,
won't know.
exactly.
That price is fractal. So the same thing happening on one time frame is the same thing happening on another time frame. So if someone asked me a question in our previous class about, oh, so can I just stay? I remember someone asked that question, can I just stay in one time frame, or can I just trade only one time frame? Yes, you can trade only one time frame. You can trade only one time frame if you understand the movement of price on that one time frame. If you are able to map your structure well on that one time frame, and you follow the structure the way the structure is going. Remember, we talked about break of structure, right? That price is when price breaks to the upside, there's a break of structure, right? Price takes out the high. So if you're trading 1 minute, you see, okay, this was the impulse low. This was the last what? This was the last lower high that took us to the lower low, right? So when price came back and broke it, now we know that we have broken structure to the upside in the 1 minute time frame. So now what you start looking for? You'll be looking for only buys in the 1 minute time frame, right? You'll be looking for buys and be mapping your structure. Be mapping your structure on that time, mapping your structure on that time. We've seen that, okay, this was our last, this is the last higher low, we created the higher high. This is based on structure. Inside the 1 minute too, we have our minor movement in structure, but I'm telling you the major structure in the 1 minute, right? So this was the next correction. It now corrected to create another higher low here. So you can just be mapping. Now, this is how to understand it. Let me give you a clear way to understand how the movement of price, how to know where you are in structure. Always ask yourself, where was the last, if we're in an uptrend, ask yourself, where was the last higher low that created the impulse? Where was the impulse from? The impulse that took out the higher high. So let's imagine this was the last high, right? This was the higher high, right? Let me use this. This was the higher high. This was the higher high, right? So this was the higher low. So always don't lose track of the higher low that created the impulse. Where did the impulse start from? Impulse means, if price does, it means we call it the rally. It's also called the rally. That means price going in a particular direction without taking a break, right? So if you look at this place here, we see that price went in this direction without really taking major breaks. It was just tiny retracements, that formed our inside structure here. But this is the impulsive move. So you look at where was the start, the higher low that started the impulsive move. You mark it out. You mark out that higher low, right? Then if that higher low is not taken out, we are still bullish. If price does not come down like this, if price does not come down like this and close below this higher low, we are still bullish. So all you'll be looking for, even if I'm trading only the 1 minute time frame, I'll be taking trades in the direction bullish, be looking for buys, buying. So all this thing that came, all this retracement that came here, because it didn't take out, I'll not be afraid and say, oh, we have changed direction, they are not now selling. No, we are not selling. Because why? In my structure mapping, this higher low is where the impulse started from, the impulse that took out the higher high. So that's where I'm mapping. So I'm still buying, I'm still on an uptrend until now. If we mark out this point, we'll mark out this point here. Let's mark out this point here. You see? So if I'm looking on the 1 minute time frame, let's mark with the red line. If I'm looking at the 1 minute time frame, I'll be buying until I see price close below this point. So I'm still, as far as price has not closed below that line, I'm still bullish in my structure mapping. Can you see? I'm still bullish. Price is still bullish, and true to the fact, price is bullish until this point. When price now came here and this candle and closed here now. Now, when price closed at this point, this closure of this candlestick here, right? Where this bearish candle close here, below that point, you see that it's a candle closure below. Now that tells me that what? That is my what? Price has broken down. Now we have most likely changed direction. Sorry, I'll have to exit full screen. We have most likely changed direction. Now we are bearish, but I'll be waiting for confirmation. I'll now have to map to the last impulsive move that brought us to this low, right? This is the last impulsive move that brought us to that low. I don't know. I hope it's not getting confusing and that we understand, right? So if we look at it, you see, this point is the, sorry, that point is the last point that imposed, that came with one line and took us there, right? So you see in the 1 minute, we have changed direction. As soon as we close here, we change direction bearish. So if you are selling in the 1 minute, you are a scalper. So you could have sold to this point, right? And taking your profits. Then you'll be looking at this point. Once that point is taken out, that's when price has changed direction higher again. And you can see in the 1 minute, because it's on the 1 minute time frame, it's changing, it will change bullish, it will change bearish, right? So that's why it's very important that you always check the direction of the higher time frame before you go lower to the lower time frame. Are you guys still with me?
Yes.
I hope it's understood. So I don't want to load us with too much, but I think when you go back, watch this video again and practice this thing, right? So for this class, it's safe to say that we looked at these three basic things and we delved into the charts to see what we have been explaining all this while about market structure, higher high, higher low, and all that. So we from this class, I hope you have been able to understand the advanced market structure is just combining your basic market structure and the concept of inducement to it. That will give you the move of the market in advance. So, right, as a means of recap, inducement is always the most recent higher low. Even if you are in that direction, the only time that the market will change direction, if market came down to the inducement and market, not even that it closed, market took out this recent higher low and takes out the next higher low and close below it, then we can call it, some people call it in the marketplace, change of character, or we can say now we have a valid break of structure to the downside. So market is now going down. That's what I explained in the chart. Then we understand the concept of the impulse and the correction. Now I say the impulse is where the impulsive move started from the last higher low that went up to take out the higher high. So we can term this place now our impulse. This is the where the impulse started that took out this higher high. So right now, if anybody trading NAS or you know someone trading NAS right now, if you are looking at the 1 hour time frame, 1 hour time frame, which is like the daily, it gives us structure. If we are day traders, we can follow the direction of 1 hour time frame for our day traders to stay. Now NAS is bullish. Now we see all this bearishness that came down here, it's still bullish until this next low is taken out, right? Until this next low is taken out, then we can say NAS has turned bearish. I hope this class was insightful and gave you a little understanding on advanced market structure, right? So let's have
Yes,
time
sir.
for you have your questions. Can we just ask question before we call it a day or a night? Any question? Hope it's understood. The good thing about this, and that's the reason why most people are not joining in the classes, because the videos are always on YouTube. But there's nothing like asking question, what you can ask question, right? But also when you go back and watch the video, you can always interrupt me in the next class to ask question on the previous class. I'll always be available to answer, because I really want us to understand this thing. My real joy will be in the next 6 months, I see people profiting from the marketplace. So I don't just want to just teach you and just leave you in a limbo, right? So in the absence of any question, okay, we are good to go. So the videos are always available. Okay, Maranatha, please just turn on your mic and ask your question.
All right, thank you, sir. Can you hear me, sir?
Yeah, I can hear you loud and clear.
All right. So, for the inducement, is there a scenario in the chart where there are double inducements? Because normally people like the example you gave where people set their stop loss in the previous low and then the inducement happens and takes them out. Is there a scenario where the algorithm plays out and people who are already trying to sell get taken out, and then when you want to probably you think the inducement has played out and you try get into the market again, and then a second is inducement still happen at a very close interval?
Yeah, now I will say yes and no. Now let me explain why I'll say yes and no. Now let's look at this diagram for a bit, right? Now, if you look at this point here, if you look at this place, the law is that the first higher low, the first or the most recent is the inducement, right? So now I can say yes because now let's say after price came here, probably price took out. Let me explain with the live chart. You see, okay. Now you see this is a 1 hour candle, so it showed you as a shadow. But if you go to a lower time frame, there are multiple candles here in this place. So probably when price took out this point and if that first candle closed here, they are like, okay, yes, it's time to start buying back now. But price still continued deeper, right? But you see, it didn't take out the next higher low. Do you understand me? So people might be
Yes, sir.
trapped. Yes, people might be trapped. Yeah, you say, okay, the inducement has just completed. Now let's go in, but the price still retraces deeper, right? So because you can never tell how deep the move will be to take out the inducement. Sometimes it's just a minor wick. When I was explaining, there was an example that was just a small shadow that just took out that last low. Sometimes that's rapid. Sometimes it can come deeper. Like this situation, you see, it came deeper. If you are calculating in pips, right now it's almost a movement of, let's say, almost NAS. So this is almost a movement of almost 60 or 68 pips or 68 points, right? So someone might say, okay, maybe the inducement might just be 20 points. They'll start getting on the buy, but it continues downward. So that's why I say yes and no. Okay.
So basically,
Sorry.
so basically,
Okay.
this is what you mean by the market always was the higher time frame, because if, except like you said, if you're scalping, then you have to now pay extra attention to all
Attention.
those.
Yes.
Yeah, but
Yes.
if you're private, if you're trading a higher, you know that you're still bullish because you know your points are still not being taken out. So
Yes.
I mean that just explains how deep that last one candle you pointed out was, because if you're trading a lower candle, then every move that that candle makes, determines how much you make or how much you lose. But if you're trading like a daily, like you said now, then it
Yes.
doesn't make any difference because it's still just one candle. All right, got you.
Yes. 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 You're right. You're right. So basically, that is it. Now, except we have any question, our next class, let me just tell, I always tell us the next class. So the next class will be looking at, we're looking at liquidity concept, because it's always good to merge liquidity. You'll never understand the concept of advanced market structure well until you understand the concept of liquidity too. So in our next class, we are going to be looking at liquidity, right? So I'll be teaching you on the types of liquidity. There are two major types of liquidity. There's a time-based liquidity and there's a price-based liquidity, right? So we're going to delve into them in the next class. Maranatha, final question before we call it today.
All right, sir. So thank you, sir. So what would now be the right place to set stop loss? Since the previous one can be taken out, is he like is there like a rule like you have to set the stop loss probably at the penultimate higher low so that you will
Uh,
be prevented from being inducement?
Okay, so Maranatha, just this is your question, but I'll just put it in the back of your jeans, because when I start explaining the concept of liquidity, you understand the right placement where you can place your stop loss, right? If I can just tell you now straight that, okay, you place your stop loss here, right? Because the concept of liquidity too, you have to make both of them, market structure, advanced market structure with liquidity, for you to really understand the movement of price. Do you understand? We are going to get into that. Don't rush. Don't rush. I am sacrificing to give it time so you understand these things. So if you follow me, and just follow the class and make sure you study these things the way I'm teaching them, you understand this concept, and it's very easy. By the time we get into entries, because we are going to take a class on how I look at the market, how I go to my entries, my precise entries that I take, right? So you see them when we come. So don't rush. Just calm down. Take it easy, right? Okay, so thank you guys so much. Thank you for your time in this class. I hope the class was insightful for you. I hope it gave value. I hope it gave value to you. So hopefully we'll see in the next class on Tuesday. Please, let's go. Our assignment is to go and study this concept very well, mark them, drop them on the chat. I always have time to look at them and correct them, and bring your questions to the next class. Thank you so much. Let's have a wonderful rest of your day, rest of your night.
Thank you, sir.
Good night.